What is up, guys? Good morning. Welcome into another pre-market breakdown here with the Everyday Growth Advisors. I hope you are having a good morning or a good evening. What can I say? Beautiful setup, beautiful played out the entire week, and we are pretty much at the target as I had pretty much predicted at the start of the week on Monday. Sent out a newsletter to tell you guys about what could possibly send us down in terms of technicals, and pretty much hit it, right? As you can see, I wrote on a newsletter that the bearish plan for this week was to see that breakdown all the way down to 40.60. This was posted on Monday on the newsletter and also on Discord, where we would see likely bulls get pressured by the bears. If not, we get the upside retest of 41.50. We didn't get that, so the breakdown pretty much ensued, and that wave sent us right down into 39.40, which is this target right here. Pretty beautiful, I think. Played out really nicely. Of course, I played SPX puts, but then I closed those out yesterday on that wave up. It's been a rather good week for me. I think all in all, I'm really happy with this week's performance. Seen considerable nice trades that we managed to cash out, mostly all green. So yeah, we'll see how this day closes out today, but we are pretty much almost there, about 20 points away from the target, and it's always nice to see when you've planned something out and it goes according to plan. That's usually the best scenarios to play out. Now, what is going on, or what is causing this sell-off? The PCE numbers just came out at around 30 minutes ago. Now, U.S. core PCE is pretty much a measure of inflation X food and X energy. This is a basket of goods and services that we survey that consumers are spending on, which is a really important gauge factor for the Fed in determining if inflation is moving up or down. The numbers came out much hotter than expected. Headline year-over-year PCE was 5.4% versus 5.0% expectation. So 5.0 was the expectation. It came out as 5.4. That's much hotter than expected. That means inflation is still rising. Then you have core PCE, which is ex-food and energy, which was at 4.7% versus the 4.3% expectation. Also pretty hot. Then you have headline PCE, and then You have consumer spending that was at 1.8% versus 1.4%, and personal income was at 0.6% versus the expected 1%. So people are earning less and spending more. That's pretty much not a very good, expectation of what we would, feel in a disinflationary method of inflation. So the Fed, has been banging on the table saying the same thing to everybody, but the market didn't believe it. I've been kind of guiding you guys as much as I can through the pre-market lives and also the newsletters to tell you guys that this huge wave up and all of this bullishness that we saw was yet another mirage to send us further back down, and that's playing out pretty much nail in the head. As we see this market start to fall back down again. So, honestly, no surprise here, right? There's no surprise. I think if you've been attending the live stream, pre-market live stream for a while, and you've been following along with what we've been saying, I don't think there's any surprises here. It's just pretty much everything that we've been expecting for inflation to come back, and just the fact that it's not going to be an easy path forward. So inflation's higher. Why is the market selling off? Well, that pretty much the market is pricing in additional rates or higher rates for the next couple of Fed meetings. And trust me, the Fed is going to do everything in its power to make sure that they keep inflation in control. And the only way they're going to do that is by further raising rates, right? They can't run off the balance sheet too aggressively because that will tighten monetary policy and then completely break the system. So they remember, the Fed has always two tools to do things, and one of the tools is either by creating liquidity or tightening liquidity, and they can do that by either buying and selling bonds, or they can they can vote on what the federal funds rate should be, which is the rate at which banks borrow from one another. So that's why the reason the bond market is kind of selling off here. We're seeing across, all the bonds here are seeing a big sell-off, which is the reason why the yields are all up this morning. You can see in fact, the 5-year yield is the one that got bought up the most, followed by the 3-year yield and then the 2-year yield. And also on the short-term bonds, you can see that the 1 month and the 2 months yield are really, really getting slammed this morning. On top of that, not helping the situation is the strengthening of the dollar index against the basket of currencies. This reduces the pricing power of consumers or pricing power of investors, and that also puts considerable downward pressure on the price of equities, because you can buy less stock when the dollar, which is denominating the asset, becomes more expensive. That all in all, of course, the 10-year bond is also up about 1.29%. Remember, this is a really important one to track as well, because it's really widely used in all kinds of valuations. So the discount rate expectations are also going to go up. So it's really just a lot of different things across the board that is causing this sell-off here. Okay, so I hope that was clear. I hope you understand. There's many different factors that play into why the stock market would sell off. The VIX also up about 5.3% this morning. Not really that much of a huge up move on the VIX, but you know what? As we expected, the VIX did pull back. I mentioned on Wednesday's live stream, and now it's starting to kind of resurge back up above $21. So we'll see if the VIX can continue up. We need to still get above 23 and then 25 eventually. These two are really the key levels here for that panic to start to set into the market. We are kind of finally moving off the greed and heading into a lot of the fear territory, or maybe we might be a bit neutral right now, but heading towards that direction. I will be looking to possibly go short financials here. Obviously, this would be a decent play heading into this next 1 to 2 weeks. I think looking at financials being weak here for the past couple of days, I like this trade. I've been watching it pretty closely, so I'll be probably looking at that one. Semiconductors with NVIDIA, very big earnings beat, and obviously now it's going to have a little bit of a pullback, so we'll see if SMH and the rest of the stocks within SMH start to get affected as well. That will be another opportunity that I'll be looking at. And then of course ARK Fund here, with all of these high beta names, are likely to get completely pummeled and destroyed on this news. So I'll be watching the ARK Fund below 39 50, which is the level here. We're already there pre-market. I would love a bounce so that I can get an entry. But if I don't get a bounce, then it is what it is. We played GM, pretty nice play this week. This was a rejection, and then it got pretty heavily sold off. We played a really nice trade on this one yesterday. Managed to bag 30% or so on that. I've been going pretty risk off this week because it's been a pretty weird week. And Tesla, remember this one has Investor Day next week. So keep your eyes on this one. It's forming a pennant here. Could possibly make a move either way, obviously, to the upside or the downside. So we'll be watching this one closely as well. A break above, I want to say 205 will send it to the upside, and then a break below 192 will send it to the downside. So this is going to be the two key pivots here. So yeah, I'll be looking at that specifically for Tesla heading into this trading session. Of course, there's like another mini pivot, which is where it is right now. So these will be the key levels that I'll be looking at. Netflix got absolutely demolished yesterday. Managed to catch some of that as well. Traded Netflix along with GM. This was another trade scalp. After it sold down, we played the wave down. Really nice move. So we'll be looking to see if this breaks below the 314 level or so. Then we'll be looking to take that downside action on Netflix back again into this little consolidation zone. From what it's worth, I feel like it might just move sideways or bounce in this region here. Nvidia, not really going to look at it right now. Let this thing consolidate. It's not really going to make much moves. I don't think it is going to make so much moves. So let that thing consolidate for a little bit. Airbnb, this was another one. Bank of America still has some room to go to the downside, but risk-reward ratio is not really that attractive. Square had a positive earnings beat. And then Enphase Energy, which is consolidating in this descending triangle. Will it finally break and head for this big coverage into this space here that it has? It's a really big funnel looking chart. So, we were expecting it. If it breaks here, then the next stop is going to be around 177 or so. So we'll be watching Enphase Energy for potential opportunity this AM as well. This one tends to move very aggressively. High volatile stock. I like the way the premiums move. So we'll be looking at that one. Baba continues to be bearish, as we covered on the previous live stream on Wednesday. Looks pretty decent for this continuation down. Remember I mentioned anywhere between this 94 and 95 all the way down to 77. This range is going to be that potential range for a bounce. So now we've cleared that 95. The next stop is going to be 87.58. This level is going to be a pretty important level for Baba to bounce on. If it doesn't bounce here, then it's going to go straight down to the 77, 78 level for that potential inverse head and shoulder, and then we can set up for this bounce back again. So this will be that opportunistic moment for those of you that didn't buy Baba shares to get in. If you're an investor, this is that moment you can take. You can sell cash secured puts, and try and get some action. Also following oil prices, or rather oil and gas sector, pretty closely. This one has been performing pretty strongly. Kind of squeezed back into this little pennant that it's been trading within. So if this was indeed a fake out, then we'll be looking for some upside on this in the next couple of days. I won't be trading it until I see the confirmation though. So I'll be waiting patiently to trade XOP in the future as well. Meta looks like it had that descending wedge pattern, but then it's now invalid. It looks like it has already broken down. That entire thing didn't play out the way that it was supposed to play out, and so this is now looking for a potential gap fill all the way down into the 161 level today. We'll see if it actually gets there. That'll be an interesting one for today. That's all I have for you guys today. Any charts, anything that you want me to cover, go ahead, put it in the comments right now. Now remember at 39.40, this is likely to be a potential bounce level, so please don't be stupid and at the market open try to chase this to the downside. Please wait for the retracements to happen, see how we interact at this 39.40 level, and within this range, to be honest, at 3900 even, and then we can get a further decision on what we want to do with you know, these positions. So my recommendation is today try to be risk off and don't take on too much of risk. Wait for the market to bounce, let it do its thing, and then when the time comes, you will get your answer. All right. Any questions, comments, charts, anything like that? Go ahead, put in the comments right now or the chat right now, and I'll get to them. If not, then I am off to trade with my team on Discord. CM? What's CM? What's CM? This one? Canadian Imperial Bank of Commerce? Oh. I don't know much about Canadian banks, man, but this looks like a bearish formation, though. Oh, but it does look like it's kind of potentially bottoming. Let's see. I mean, there is a possibility, but if this breaks back down below 43 bucks, 43.50, this is now void. I think it's like almost like a wedge pattern with the potential breakout. Personally, you have to wait to see what happens here. The key pivot is going to be, well, support pivot will be 43.19. Actually, it's actually a zone. Hold on. This is the right way to look at it. It needs to bounce within this zone. If it doesn't bounce, it's going to lose it. It needs to bounce right here between 43 to 44.50. If it doesn't bounce where it is, then it's unlikely to play out this long pattern that it has. It'll likely see that fall back in. It looks like it's still in the downtrend though, so you have to be really careful. This could be a fake out. Does it have a history of doing fake outs? It does. It does. You gotta be careful. That will be my analysis. Be careful. What's the market cap? 40 billion, not bad. Okay. Boeing. So this one, yesterday consolidated, today it just broke. It's down, and it broke that level. What you should plan to do here is wait for the pullback to retest 203 or 208. Once you get the retest, then you can short it if it rejects. If it doesn't reject and it retests or pulls all the way back up, then you would be looking at around a 210 bounce to play the upside. So two ways this goes. Either 210 bounce, or you get the rejection at 207 or 203.50. That's the way I would play Boeing. Either one. Oracle. Oh, this is nice. I like this. Let's see. God damn. This thing has got some weird price action here. Oh, that was earnings driven. Okay. This is nice though. I like this chart. Really nice organized price action. It's good. Okay, well, it's in a range right now, so this is easy, right? You just have your two pivot points. Break above or break below. Simple as that. Keep it here and here. So below 86 with the break and then the confirmation. Break, retest, confirmation, short. Break above 90.50, retest 90.50. That's your upside. That's the way I would play this one. I wouldn't touch it otherwise. The risk to reward ratio right now is stuck. If you take the short position here, you're very terrible risk to reward ratio. You take the long position here, you have pretty terrible risk to reward ratio too. So I would wait till it breaks either one of these two pivots. Nervous wreck. That would be my advice. Julio? Julio? Yep, that's Amazon got smacked as well. This is a key pivot for Amazon right here. It needs to hold this. If it doesn't hold this, it's going to get smacked all the way down. 93 bucks, and then it has another one at around 91.66. These two levels here are very important for Amazon. If it doesn't hold this, it's going to get smacked down all the way back into the demand zone. So we'll see. Alrighty then. I wish you guys a good luck and trading session. Remember, once again, a 14 days free trial Discord is available. Make sure you join us if you haven't thought about it yet. Link is in the description. Check us out. No harm, no foul, and checking us out and getting that so that you can trade with the team. At most, it's not a fit for you, and then we part ways, and you'll be happy, and we'll be happy. So we hope to see you on the trading floor. And till next Monday, peace, take care, and I'll see you. Bye bye.